So this video is specifically going to be about different trading styles. Alright, so after understanding the difference between trading and investing, we're going to take a deeper dive into understanding trading. Okay, so trading again is a trade that is a buy and a sell, or a sell and a buy if you're short selling, that is within 1 year. Okay, and now I wrote down the different styles of trading over here. So the first style of trading we have is day trading. The second style of trading we have is scalp trading. Now we have momentum trading and we have swing trading. So I'm going to start with what is day trading. Okay, day trading is taking a position within 1 day and closing the position within the same day. So if you want to day trade, for example, the NASDAQ or the New York Stock Exchange, which opens at 9:30 a.m. Eastern Time and closes at 4 p.m. Eastern Time, okay, US time, then that is a day trade. So if I'm going to buy it and sell it within 1 day, okay, no holding overnight, no holding for more than 1 day, okay, you're going to buy and you're going to sell it, or if you want to short sell, you're going to sell it and then you're going to buy it within 1 day. Now, to be a day trader, okay, you need to have a decent amount of time to do analysis and to look at your positions as they are trading. Okay, it's not like an investment where you can just make the trade and then not have to look at the chart for a year and then come back a year later and it's somewhere else. No, day trading, you have to be at your desk, you have to be on your phone while the trade is happening, because you cannot miss the opportunity of something happening and not being able to react and to make an execution on the spot. Okay, now there are some exceptions. You can post alerts, you can have a prepared setup algorithm. Okay, so now within these categories, within these styles of trading, there's different strategies. Okay, algo trading, HFT trading, technical analysis trading, fundamental trading. Okay, but no, we're going to specifically understand just the styles, just the parameters of the styles of trading. Okay, so if you want to be a day trader, like I said, you have to be educated, and second, you have to have time allocation to be able to execute a trade if there's some sort of uprising catalyst. Okay, the next style of trading we have here is scalp trading. Scalp trading is also trading within a day, but the difference is it's much shorter. Okay, scalp trade is a very fast trade in which a buy and a sell occurs within seconds. Okay, now maybe a scalp trade, to be generalized, it is a trade that occurs within 1 minute. So if you are entering and executing a position within 1 minute, then this is considered a scalp trade. Okay, in a scalp trade, you're not looking to make massive gain, and you're not looking to make a massive loss either. You're not looking for a massive change in price. You're looking for a very tiny increase or decrease in the financial asset price. And what's the advantage with scalp trading? Well, you can take an extremely large position, let's say $1 billion position. Okay, well, that's something easier to do when you're done with the forex markets, but let's say it's a stock and you take $1 billion position on Facebook, and let's say Facebook is a $200 stock, so let's say we have $2 billion and it goes up 1 penny, and then you decide to sell it. Well, even though you only made a penny per share, still $2 billion worth of the asset price is far exceeding what you can actually attain in total profit. So scalp traders look to enter and exit positions with very large size to make very small gains, and to do this repeatedly over and over again to make a pretty decent amount of profit. Now, what kind of traders are using scalping? The most efficient one, in my opinion, again, is HFT. HFT is high frequency trading, and these systems don't even trade in seconds. They trade in the minimalist form of time. Time is such an important topic, but they trade in nanoseconds. Okay, these HFT systems go to the market, buy it, go back into the market, sell it within a very, very, very short period of time, and make very, very small profits, but do it over and over again, millions of times every minute, and ends up adding up and making huge gains. The third style of trading is momentum. The style of momentum is to trade when there are opportunities with large amounts of volume. So for example, when all the sheep are moving in one direction, maybe you can be in front of the herd, or you can be on the opposite side of the herd, like contrarian trading, which is another strategy of trading. Contrarian is to go against the momentum and to go against all of the sheep. But if you're early enough, being a momentum trader can be an excellent way to stay ahead of the curve. Or if you want to be contrarian and you want to go against the momentum, then that's another style of trading. Okay, but I mean, that's another strategy of trading. The style of trading is momentum, is when you're following a lot of volume, when you're following the momentum, when you're following, there's a new news event and the stock's going up and it's doing breakout patterns. That's momentum, because it's getting stronger and stronger. Okay, and the last style of trading is swing trading. Swing trading is unlike all of these other ones. When day trading is within 1 day, when scalp trading is within 1 minute, momentum trading will, you can follow the momentum for as long as you want. Like typically, in my experience, momentum, I mean, it can last some time. Like for example, Tesla right now, after it broke 400, has been on an increasingly strong momentum. Okay, that's a momentum trade. I don't know how long this could last. Could last weeks, months, but if it's over a year, then you're investing. So I mean, you can have a momentum trade that lasts a year. There's not set rules. Okay, but momentum is following a specific trend, and so it doesn't have to be within 1 day. Okay, these two are within 1 day. Swing trading is different than all these other styles of trading, because in swing trading, you're looking to either look for the formalities of either pattern extensions, or just look at a point A and point B and look at a longer time frame. Okay, because swing trading is anything over 1 day. Okay, so there's overnight. You can hold overnight. So swing trading is within 2 days and is less than a year, and that's a swing trade. For example, let's say this is a time frame, okay, and let's say these are the days 1, 2, 3, and it goes up until 10 days. Okay, I'm pretty sure you can see that. And then the stock has been going like this, and you think it's going to go here. Okay, so a swing trade is buying it right here, and then waiting. See, it's going to take 8 more days for it to go to here, if that's where your position is, and that's a swing trade. Because, for example, maybe this was a pattern over here. Okay, so you saw a pattern, and you looked at the longer time frame and realized that it would take a longer amount of time for this trade to plan out to your target price. Then you're gonna have to swing trade it, which means hold it over more than 1 day. All right, I mean, since I gave you one of these examples, I might as well give you a momentum example. Momentum example is like, you have a stock going up a lot and the volume is increasingly getting bigger and bigger. Okay, maybe you see the volume is very big here, and you've linked it to historical prices, and you saw the volume could reach much higher than that. So you get on early on a momentum trade, and the stock keeps going up, and you entered here, and the volume just keeps increasing. Then you sell once you saw it reach the highest maximum volume. That's an example of a momentum trade. A scalp trade is great because I can show you a good example of a scalp trade. A scalp trade is, for example, you have a range, okay? You have the stock going up and down, and it's hitting this resistance and it's coming back down to the support. So a scalp trade can be where it hits the resistance, okay? And you know it's going to go down because if it's hitting the resistance, and you saw the past historical trend that every time it hits a resistance it goes down. So then you short it right here, and then it goes down a tiny bit because maybe it can break out really strong. but you take a short and then you sell it right after it bounces that resistance, and you make a very, very tiny % gain. But with a large size, and especially short selling a resistance point, you can really drop down that stock. Okay, so that is scalp trading for you. And the day trade is just simply a time frame very similar to the swing trading, but just one day. Okay, and let's say the stock's going up, you see a pattern. Oh, I drew a box. I don't know any box patterns. I do actually. And then it breaks out, and then you buy it right when it breaks out, and then it goes up to your target price, and then you sell it. So I hope you understand now the 4 different styles of trading. In the next video I'll make the same thing but for investing. See you guys next time.